Welcome to StockMarketFunding.com. As you all know, we did that CRE trade yesterday based on the chart being overbought. And this is a stock called Netflix, NFLX. That's where you can order your Netflix. And what I want to show people on the tape here, we were masters of masters, and Netflix is way up here. Now this is out of the money, $80 put, and there's an $80 call. And so the stock has got to drop to get some premium, because it's $8 out of $6 and some odd pennies out of the money now. And what I want to show people here is that on the tape, it says right up here, Netflix, $80 call, and that call contract is basically right here. And yes, it's an $80 call that's inflated in price, in my view, and they can always get a little bit more inflated, but they're not going to stay up here. And the other reason is on that $80 call, even though that the earnings are going to be good on Netflix, no one says that they're not being good now, because I'm not telling you that. Just like I said the earnings would be good on CRE. Look down here. I'm 93.83% overbought on a weekly, and I'm overbought up in here on the $80 call in the money. I want everyone to know that we are overbought on a weekly as far as the equity goes. And you can only go so high. Now, down here, an $80 call or $80 put out of the money, same thing here. See how far? That means that this is ripe to come down, and this is down here in the deflated zone. In the money, at the money, out of the money. What we do here is we look for mathematical imbalance ratios based on risk mathematical equations when it comes to trading out of the money, in the money, at the money. And we are out of the money. Both $80 inflated. So this is the other side of that call. That's ran straight up. Way back over here. Hell, it was only a dollar or whatever it was. $1.50 right here. $1.50 to right there. Look at that. Look at that. Now, on the other hand, check this out. These were $8 over here. And they've gone straight down. And the thing about it is that when I show you what it's about, say what it's about, is that this contract right here, yesterday high was 440. And I'm hearing that traders got hit at $2.65. Okay. And it's a very narrow range. Yeah, they undercut it today. But this down in here, we felt that, you know, there is 3, 6. Who's all buying the contracts, SMF Pro traders? 3, 6, 9, 2, 4, 8. And the thing about that came in with 60 contracts and 40 contracts here. There was some other contracts like 267 on 20. So you can see here new trading students and senior trading students. And senior traders are senior traders. The thing about it is, because we're overbought on a weekly and we're oversold on the $80 call, this side's ran, this side all the premiums been taken out. Over the next week or two, there should be an adjustment to the upside. And that means that what looks good here, what looks really good here, is that it has a way of coming down because it's deflated. And both equity and calls are inflated. Open interest, 2,700 on the put, 4,100 on the $80 call, right here. $80 call, right there. And that's, so everybody, you got a lot more money on this side of the market that's in the money that are holding on, not willing to sell. And it's generally been my experience when they're not willing to sell is when they need to lose $4 or $5 a contract. Okay? On the other hand, this contract here, look, 2,778, and you do the mathematical difference, and you'll $90 call. That volume today, I want everyone to know that 1,800 contracts is the total volume today on that 90 up and out of the money. 1,757 of the $85 put, slightly at the strike, slightly in the money, 1,700. So you had more total volume bought here today than you had open interest prior. 2,300 of the $80 puts traded now, and you had 2,700. $80 call in the money. Naturally, it's $8 in the money, or $6 in the money, 257 contracts. Now, check this out. Check it out. $80 put is an $80 put. Like I said, this is the imbalances. The whole idea of taking the trade isn't based that they're giving bad earnings or betting that they're going to have bad earnings or thinking that they're going to have bad earnings, because they're probably, I don't think they are going to have bad earnings. What I do believe, though, is this right here. I do believe that the equity in itself, what I do believe is that the equity itself on this 3-minute chart right here, here it is that the equity itself has ran in anticipation of a great earnings and great execution. That's what it, I also believe that we could go a little bit more overbought in the short term, but we would come back, we would always get our money out of those puts. Yeah, you could go up to 95, 96. If that was the case, we would add more. That's why we only took a small position, so that we would have that opportunity of adding more on any volatility. And I'm 93.75. That's another reason why we're doing it. Buy the rumor, sell the news, short the public, short against the public. You've been given a gift on NFLX.